Hey friends, thanks for joining me, Jim Baroud, to hear a few insights from leaders who support our corporate innovation ecosystem. Today's chat includes investors Kange Kaneene from SAP and Luke Cherrington from Latitude and AB InBev. Go ahead, Luke. Tell us about yourself and what you've been doing.
Hey team, sure. So just as a bit of background, kind of I'm a former founder slash co-founder in the tech space. Was based out in California for a bit, and helped grow a couple of B2B technology companies. Ended up exiting one of them, I guess now 6 years ago, and I joined ZX Ventures. So ZX is the venture capital and innovation arm of AB InBev. It's mostly focused on how we build, partner with, and acquire companies kind of across the space. I joined there about 4 years ago and helped kind of grow how we work with startups, whether that's stuff we're starting internally or running internal accelerators or running external accelerators. And for the better part of the last two or so years, I've kind of started and launched and led our tech investment fund that mostly focuses on B2B technology investing. I have recently, as of last month, left AB InBev to launch a new fund as well.
Great, thanks. Kange?
Hello, everybody. This is Kange Kaneene. Nice to talk to you all today. I work for SAP. SAP is a large enterprise software company. It competes and partners with companies like Oracle, Microsoft, Salesforce, Workday, just to give you some context. For SAP, I focus on global business development. So that means partnering with our SAP's fund and also accelerator, but also looking for partnership opportunities to help to acquire startups and partner with them as well. Happy to be here.
Great, thanks. And I love that background, wherever you are. Anyway, so tell us about this. You both have so much experience. I want you to talk a bit more about some of the companies you've invested in and what it means for your corporate parents, how they view innovation, how they view corporate venturing. Why don't we start with that, and then I'll ask you more about corporate venturing in general as far as trends. So let's start with Luke. Go ahead.
Sure. So, when I was at ZX, our main focus was investing. So to be clear, ZX and ABI have multiple venture capital units. And I think that's a trend you see amongst a lot of companies, especially CPGs who want to invest in the technology space. And some focus on their core verticals. So in AB InBev's case, that would be beverages, health and wellness, things like that. And investing in companies a lot of times with an eye for longer term partnership, potentially acquisition, things along those lines. And then on my side, it was more focused on kind of the technology side. So the types of things we would look at would be often things that help us kind of reduce our costs. That's very frequently in areas like logistics and supply chain, manufacturing, future of work, and kind of taking in new external technologies to modernize the business. There's also some areas that are in technology that we'd also might potentially acquire or punt over the core business. That's a lot of times things like e-commerce platforms for selling beer or things like that online, very specific to the core vertical. So that's kind of what we'd look at. I focus now just the same in the same vertical. So a lot in logistics, supply chain, future of work, commonalities across Fortune 500s, where it's really around reducing costs. And modernizing and digitizing the infrastructure that your kind of business runs on, which SAP is very good at as well, I'm sure.
So. Good transition, Luke.
Yeah, there you go.
Thank you. Same thing on our side. So one of the things we focus on is finding companies that we think, even if they're too early right now, could at some point be a strong contribution to our ecosystem. So that means even helping to serve our customers in a better way because they have functionality that closes some of our gaps or helps us get into a new demographic, or most importantly, has an innovation that is something that we can leverage to make our portfolio stronger. For the past few years, I personally have focused a lot on business networks. So that's a two-sided network with buyers of suppliers of different things, either in procurement, e-commerce, et cetera, and also trying to see how we can give an industry-specific lens to business networks.
Great. Okay, so tell us about let's talk about pre-COVID and now COVID, and then we can sort of forecast post-COVID. So tell us what you've been seeing. So Kange, I'm going to start with you on this. What were you seeing before the pandemic, and how things changed in your area?
I think now, before the pandemic, it was, I was seeing a lot of the same type of companies. So for example, future of work is really trendy right now. So thinking about things like hiring without bias, how can you take, someone's background out of the evaluation process when it comes to the demographic, where they went to school, et cetera. I saw in the networks perspective, I saw how to optimize things like supply chains. But now post-COVID, people are very innovative about how to think about the industries that are suffering and how to help them pivot. So specifically, there was one company that focused on restaurants, which you might think, this is not the time to focus on restaurants because they're struggling. But you can imagine there are some restaurants that need to figure out how to go from mainly in-person sales, so dining at a restaurant, and figuring out how to properly set up a delivery service and or takeout, and also optimizing their menu for entrees that are best suited for that type of sale. So that company helped to, interface with POS systems and use that menu information to optimize. So that's one example of how companies have looked at different industries to help them better compete within COVID-19 restrictions.
Great. And what about you, Luke? Do you have any examples of companies that have sort of surged, in this COVID time?
Yeah, for sure. I mean, I think, the first ones that come to mind around like businesses that we've seen pivot, there's an in-store technology company that bolted on like health and wellness feedback and then adapted that into like real-time employee tracking. We invested in a company through ZX a couple years ago called Paranoid Fan that's around stadium in-seat delivering and in-seat like experience. And they've pivoted to food bank distribution for being able to like deliver food at home. And it's just like an adaptation of their technology and tweaking it from like, hey, deliver from this restaurant vendor or this stadium vendor from this food bank to this person as opposed to this seat. So we've seen a lot of these types of like adaptions. In terms of companies that I'm particularly bullish on, I think one thing that COVID's kind of shined the light on, and can definitely speak to this around the corporate venturing landscape if you'd like, is around just like resilience of supply chains and like the fact that there's so many things that went wrong. A lot of that has to do with like data, visibility, supply chain tracking. So, that was already kind of a growing area. Something that like didn't really exist a decade ago, became very hot 5 years ago, and now it's building on top of the initial technology that's been created. And I kind of expect that to continue because it's just kind of shine a light on the issues that have existed.
Great. And so post-COVID, if we can look that far forward, how are you preparing, each of you, and are you preparing, or are we still managing through this crisis and investing in it or looking out after it?
Sure. I can start with that one. So I think, from a corporate venture perspective, CVCs are kind of a product of their initial structure a lot of times. The closer to a VC that they are, the more they have dedicated capital and not like on balance sheet investing. And therefore they're able to like quickly invest and be somewhat opportunistic. The closer they are to the corporate side, the more likely I think it is that they potentially had the brakes on a little bit. We've seen some corporates come out, I can't remember if it's Coke or Pepsi, and say, hey, we're really doubling down on our core brands. And I think that's potentially going to slow some of the pilots that would be happening otherwise. I think what we're going to see, near and far term are companies investing in tech that doesn't really like go out of style, which is often tech that helps them drive down their costs. Potentially I'm biased because that's where I invest and I work across corporates and help find these types of opportunities. But I think that's going to be an area where people are going to say, hey, this is more relevant than ever. Time to digitize and modernize my supply chain, manufacturing, et cetera. And oftentimes that goes hand in hand with lowering costs. I think what we're going to see less of is probably things a bit more like marketing and the kind of top line revenue growth side of pieces. Just because I think that a lot of corporates are kind of seeing that of course you need to continue to do that, but right now it's kind of all hands on deck for protecting the core ship as well.
Got it. Kange?
That makes sense. There's two things that are happening specifically at SAP. So compared to other corporate ventures, SAP's fund is quite small, and in some ways that's by design, because then we have the opportunity to be super risky, right? So SAP's focus is not to necessarily expect high returns every year because it's small compared to our overall balance sheet. So that means we can take bets on companies more so than you could otherwise. So because of that, I think SAP is still focused on finding the really cool, innovative companies, even though things seem a little bit glim right now. But on the other hand, kind of aligned to what Luke said, the types of companies that are even coming to SAP are different, right? And so that's changing how we're thinking. And because we want to be forward thinking in terms of COVID relief, then we are probably have a bias towards companies that specifically focus on helping us get through COVID, right? So retail, automotive, etc.
Got it. And so, during times of crisis or downturns, typically across corporates, there is a pullback, right? Especially with innovation, because they're cutting costs, and some of those benefits aren't tangible in the short run. So are you seeing that, or have you seen that in your companies or other companies, in the corporate arena?
Not yet. We haven't seen it yet, and maybe there's a delay, but so far we're using this as a kind of as motivation to be the most innovative we can be, because things are hard, and so that's why we're really, our attention is on the companies that are making a difference.
Got it. How about you, Luke?
Yeah, I think that's, it's company by company. I'm not going to throw anyone under the bus for not being innovative right now. But, I think that it's a mix. I think what you're seeing, no matter what, is that companies you're seeing reallocation, right? So you're seeing people who were previously, let's say at AB InBev, focused on sports marketing or, on premise, right? So selling in bars and restaurants and stuff like that. I think there's unquestionably still a focus there, but especially in the beginning of the pandemic, what I saw was a lot of people kind of also looking at, hey, how do we focus on something like ventures for good, right? How do we actually respond and be very relevant to the pandemic, and connect with our consumers that way? So I think, it remains to be seen what that ultimately shakes out like. Like, is that long-term just like reallocation of resources? But I think that all corporates, or at least all the ones I've talked to, there's at least a desire to stay relevant and to like not kind of miss the opportunity to be able to like serve customers in a more effective way. And like the incredible graph I saw was something like, we've seen the previous 5 years of e-commerce growth in the previous 6 months. And if you're not, so if you're looking at like, let's say digital grocery or something like that, their focus is on this, like Kroger or Walmart or whoever else. Their focus has shifted from customer acquisition to retention and, getting people kind of in there. And so I think that they're just trying to flex these different muscles that they might not have had to as much. Where that really shakes out in terms of like corporates hunkering down or doubling down on new tech kind of remains to be seen. I think we're kind of right in the thick of it.
Got it. And so is that investment outlook for the the whole industry, not just corporates or in general? Or did you say seeing any trends short term and long term?
Yeah, I mean, personally on my end, I think the whatever is relevant tech, that I think would be the logistics, supply chain, manufacturing, future of work, these types of areas. So that's what I think that people are kind of reallocating towards. The people who are getting hurt right now, to be honest, from the startup community, are ones that are very dependent on like in-person gathering and these types of pieces. I've seen some awesome pivots, but if your whole business is based off of something like that, or experiential marketing or something like that, there's not really anything you can do right now if you're dependent on a stadium being open for football season or something like that. So that's kind of where I've seen things kind of decrease. And my guess is that they would come back kind of in line with the kind of the changes back to the new normal, so to say.
Got it. And what
Yeah,
do you
and
see?
I'm sorry, yeah, thank you. Just to add to that, we're seeing some opportunities to partner with or invest in companies that are aligned with municipalities and with COVID testing and logistics there. So helping with tracking, helping with giving people the results faster electronically, digital waiting in line to go to testing places, helping people get from one hospital to the next. So the logistics within COVID itself, there's an uptick in companies that are looking at that as well.
Right. And what about, you both come from global companies. So are you seeing sort of differences in sort of geographic focus areas, or, as far as different investment levels?
Yeah, to me, it's been about the same. I mean, we've always had, we started in the U.S., so U.S. is highest, then Europe, then Asia third, just because that's the order that we launched the fund. But in all those three regions that I mentioned, the pipeline is the same in terms of the volume.
Okay.
Yeah, I think similar. COVID's hitting everywhere, so that's not really like, there's this one area is so much more focused. I think, personally as an investor, I have been and continue to be more active in North America, LATAM, and Europe, and Israel a little bit. But I think like APAC and some areas like that, you really need to have feet on the street to be able to invest in those markets. So I kind of know a little bit less as to what's happening in India or China or areas like that in terms of investment landscape. But I would guess that the trends that we're seeing, they do apply globally because it's a global pandemic.
Right. Okay. I'm going to ask another question, but before I do, I want to remind folks to submit questions in the Q&A prompt. I'll be pulling from them shortly. So what about entrepreneurs? There's a lot of entrepreneurs on the call in all different sectors. And I want to make sure that we get advice from you guys as far as how they should be operating, how they should be thinking, and how they should be viewing investment possibilities by corporates in this day and in the short term.
Sure, I'm happy to jump in there. I think the one thing I'd say to entrepreneurs is that they need to make their companies relevant to what's happening. Corporates, especially when working with corporates have competing priorities, never more so, I think, than during a crisis. In order to stay relevant, they kind of need to adapt their priorities to match the needs of those existing or prospective customers. So I think embracing that change, like the world has definitely changed, show that the product should be prioritized now more than others. It really is going to come in and hit for the corporates. That mostly goes from a commercialization perspective, but I put that hand in hand with investments as well. If that means changing your product roadmap or changing your messaging, ultimately, if you're a B2B company, you want to be responsive to the needs of your customers and adapt for them. So I think communication and staying relevant and meeting those needs is pretty key.
I agree with that. To add to it, I think that entrepreneurs should be very thoughtful about the money that they collect from corporates, because a lot of times, especially if you think of corporates as strategic, right? So you should think about which companies can help us do things like get more customers, co-development, et cetera, so that you can see who can be most opportunistic. And then keep in mind that for the most part, corporations don't like to invest alongside with their competitors, right? So when you think about who's the best person in this particular space or best company in this particular space to be strategic, then think through all of them and make sure that you go to the ones that can be most helpful. And then secondly, you should try to think of this as a more long-term game. So in some cases, the same corporate venture that invests in you could potentially be an exit strategy in the future. So again, thinking about what would be the best fit there based on portfolios aligning, management styles being similar, other synergies that you could think of, because this can be a long-term relationship.
Great.
Yeah, just riffing off of that quickly, I completely agree. And I think that a huge piece there is if the companies, when taking strategic capital, I always counsel people, like, if you're taking it from somebody in your core vertical, think of this closer to acquisition than investment. Because that's probably what they're thinking. There's potential lookouts, like hey, you make a candy bar and you're raising money from Hershey's. If Hershey's doesn't then buy or lead your next round, it can be very negative signaling to the market. So I think when working with CVCs specific to the vertical that you operate in, this is not by any means a reason to not work with them. It's just considerations you have to take into place beforehand, and that strategic can be both valuable or potentially a hindrance. So I think I'd counsel any entrepreneur to think through that before taking that capital and make sure that the values and the interests are aligned. I've seen this work out in ways like, hey, this company will do distribution for you, or this company will help with your sales team, or something like that. Hard coding that into agreements, I think, makes a lot of sense because it kind of aligns interests the whole way through.
Got it. So before we take questions, I wanted to make sure that I asked you for just one thing, just one nugget of insight that folks on this call could take away from our conversation. So why don't we start ladies first? Kange, go ahead.
Sure. We've said some of this already, but when you approach, if you're approaching a corporate VC to request funding, try to think of it like a partnership. So it's a two-way street. So of course, most of us can understand why you would want funding because you're a new company, but understand why a corporate venture would want to fund you specifically. And this is different from a traditional VC, right? So thinking about, like we said before, what are the opportunities to work together to do things better with customers? Of course, not necessarily revenue because it is different in sizes, but if you lead with what's in it for the corporates, I think it helps us sell internally to get approval for the ultimate funding.
Okay, great, thanks. And how about you, Luke?
I think there's two pieces I would look at. One is from the entrepreneur's perspective, and then the other kind of from the corporate perspective. From the entrepreneur's perspective, this is kind of what I mentioned before. I think staying relevant to the corporates during the crisis and adapting to the needs of the corporates is going to be pretty key, and showing why your product should be prioritized. For the corporates, when less so when working with the entrepreneurs, but more when working with each other. I think that it's natural to kind of put on silos and put on blinders and say either we know what to do or there's no real benefit that we can get from working with other corporates. I've seen the complete opposite. It's incredible how talking to somebody at Lowe's or Target or Nike or whoever else, we can kind of share and collaborate and go back and forth and understand that there's actually a lot of commonalities across our businesses. Obviously, that's kind of how I focus on investing in the commonalities across these corporates. And I spend a lot of my time talking to all different corporates, kind of in a hub and spoke model. So I think the more that you can do that, the more that you can collaborate and share different ideas, the more you're going to be able to actually have best practices, and it's going to be a lot more efficient than if you were doing it all internally, because your visibility in the sourcing pipeline just expands big time. So I think, that's the one thing I would definitely suggest to any corporate innovator is don't be afraid to talk to other people. It's just going to completely broaden your world.
Got it. All right, thanks. So here's a question about actually White Claw. So this might not be the area you were in, Luke, but the rise of seltzers, right? Alcoholic seltzers. Were you or your colleagues ahead of that curve, or did they invest properly, or was there a missed opportunity there?
I 100%. I will say just outright, like this is me speculating. So I'm not speaking on behalf of anyone, of course, at ABI, as I'm not there anymore. My personal opinion is that AB InBev was probably ahead of the curve when it comes to most beverage trends, including but not limited to seltzer. AB InBev, I believe, purchased a company called Bon and Viv, or Spiked Seltzer, back in the day. Remains to be seen who's going to win these alleged seltzer wars. But yeah, I think that a key thing that I'll say more just broadly, whether it's hard seltzer or something else, is you can be first, but that does not necessarily mean that you're gonna win the customers. That applies to like Friendster, right, or like anything, MySpace, right? All of these things were very big in the tech space, but there was something that either did or did not resonate with consumers. My personal take is that AB InBev tends to be ahead of a lot of these trends, but sometimes you see things just emerge as extremely fast growing beverage companies or technology companies that, it's kind of like, why did the consumers pick that one? But yeah, we'll see kind of where that all shakes out in the seltzer front.
Great, thanks. So here's a question. In terms of retention, since some e-commerce companies are focusing on retention more than customer acquisition, what are some of the ways you are measuring retention as an indicator for if you should invest in that company or not?
The main one I've seen is return customers. So is the customer buying something again? Are they visiting the e-commerce marketplace more than once? That's one way to measure retention.
Okay.
Yeah, I mean, I think churn, which is basically the exact same thing, is kind of the key one. I also, just to be clear on my point on retention, if you're Walmart or something like that, you used to say, I have to get these customers before Kroger or before Albertsons or whatever else. Now you're saying, okay, 1 in 3 Americans now use grocery. My customer acquisition problems that's not a problem anymore. I want to make sure I win this customer over them because they're probably trying 2 or 3 different ones. And like right now it's the land grab. From a corporate side, I think probably what you do is like incentives, very much like spend the money, do things that don't scale now in order to like maintain or establish that customer loyalty, because long-term, that's going to pay dividends big time. So yeah, from the company side, I think churn is probably the biggest number for retention. But from the corporate side, it's really focused on that like not a user acquisition, but creating loyalty.
And I think that speaks to a larger question with the big players. How do you create a niche where you can compete, or do you collaborate with them or partner with them? And there's risks involved there too. So are there things you're seeing that if you were an entrepreneur who was with a startup or a growth company, what might be the best way to sort of compete for the short and long term?
Sure, I can take that one first. Full disclosure, shameless plug. There's a company, Hala, that I help out sometimes, HALLA. That it's just extremely relevant to what you just said. They do natural language processing in order to identify more on the like ingredient level, relevant recommendations for grocery. So in e-commerce. So if you're coming in and you're buying a gluten-free bread and a veggie burger, they won't be like, do you want ketchup? It'll be like, oh, do you want artisanal ketchup with made of all organics and no tomatoes or something? Like it's very better recommendations, not just like, hey, everyone should have Coca-Cola or Pepsi because they order a bunch of this stuff, and doing it more on like a preference level. So in their case, and this is why I mentioned I think it's specialization in technology, right? So they're saying like, we're not going to just have an algorithm that gives you suggestions. We're going to really dig in, understand consumer preferences, look at it from a different way than traditional algorithms do, and be able to make better recommendations than your typical grocery does. The other thing I'll say is that selling into in this case, Kroger or Walmart might not be the best fit for a entrepreneur, but selling into the 100 other online grocery stores that don't have the resources to have a 100-person e-commerce recommendation team, that's still, a multi-billion-dollar opportunity. So I think, working with the corporates, sometimes it makes sense to go down a little bit from the very biggest guys that have basically infinite resources to do it, and instead really crush it in some of the other areas with some of the smaller players. So that's overall kind of how I think about it, is specialization and not being afraid to go after not always the biggest whale.
Okay. Kange, do you have any thoughts on that?
No, I think what Luke said makes sense. I agree with what he said.
Okay, great. And so someone asked about how to get in touch with you folks, but in general, corporate VCs. So what is the best sort of route to sort of contact folks like you, from an entrepreneurial perspective?
That's a good question, because I know it can be very intimidating for some of these corporates that are so big. Of course, it depends, but most venture groups have some type of events. So there's maybe like a call for applications online. So keep track of that. You can maybe put yourself on an e-newsletter. of course, there's old school stalking on LinkedIn, looking at your network there. Um, and then looking at the past portfolio that they've invested in and seeing if you can find connections into those founders for introductions. Those are some of the ideas I have. Anything else, Luke?
Yeah, I think that corporates can be really tough to get into. Oftentimes the venture or like startup oriented arm is easier because they're used to facing externally as opposed to internally. Corporate spam traps are also really, really difficult to get through sometimes. Like they'll just capture all kinds of messages. It's like Gmail is evil or something. Like it's not that bad. So I think that exactly what you said, Kange. I think that introductions always help. I get a lot of like cold LinkedIn outreach. The thing I would just be careful about that is it gets lost in the mix if it's not like if it's like dear sir, right? It's like I'm never going to respond to that message. But if it's like, hey, I see that we have this mutual connection. I know them from this. This is what I'm starting. Like this is my stage, but because oftentimes I'll respond, hey, that's too early, or hey, that's not something I'm really interested in, but here's another person I think could be a better fit for you. So specific to investment, I think, my email, we can always share it afterwards or whatever works for everyone to get specifically in touch with me. But otherwise, I think trying to find some avenues that way, always makes sense. Or even if it's just you have one contact inside of an organization, say like, can you just quickly introduce me to or forward my email to this person? That can be helpful as well, as long as it's very contextualized and relevant.
Right. Now, what about someone asked about LinkedIn? Is that a good mode of communication, or are you guys slammed with so many inbound messages and connection requests that it's messy?
There's a lot of spam on LinkedIn, and especially in terms of connection requests. I generally just like kind of accept anyone that I have a vague understanding of who they are, or if there's but I think like sending a message like, hey, I want to reach out, not like because I have this amazing company that you need to invest in right now, but it's like, hey, I'm solving this problem. Is this something that you would be interested in? If so, like, let me know. And if it is, oh, you're doing $1 million in revenue, you work with a Fortune 500 company, and you're in this space and you're backed by a VC, I know. Fantastic. I tend to be a little bit later, so it filters out some of these companies. But I think LinkedIn can work. I just like the spray and pray model on there. I don't think works very well at all.
Agree with what Luke said. And just to add on to it, just make it really easy for me to understand what you want from me, right? I've had people that send me a note and just said, hey, I'm doing something cool. Here's our website. Check it out. I'm not going to do that, right? Yeah. If you tell me these are 3 bullets of why this is a good fit, or I'm looking for introduction, or whatever it is, I'm happy to help. I don't want to work so hard to help you. Let me help you, and I will try my best to do it.
Got it. Okay. I'm going to just ask if anyone has any other questions, please submit them. The question I have was your success stories. Tell us about a success story, whether you invested or your colleagues invested, that people might know about or might be able to sort of relate to, because obviously there's been a lot of investments going on from both of your companies. And I'm curious to see, what's been really successful over the years.
There's a company called Good with an R afterwards. The founder is a woman named Jasmine Crowe. She's amazing. What she does is she helps try to solve the food insecure problem. So people that don't have enough to eat. Her philosophy is that the problem is not that there's not enough food, it's that there's too much waste. So she goes to food. So for example, when you go to an event and there's catering, there seems to always be food left over, and you just never know what happens to it. Usually it gets thrown away because the people that catered it are worried about donating it because of liability that someone will choke or be allergic or whatever. So she works to be the middleman to say, tell me that you have food and I will give it to a local food bank or even an individual. And we've invested in them and supported them before COVID, but as you can imagine, is even more relevant now when people can't get around as much. So that's a company I'm super excited about.
Yeah, I love that. There's another company in the U.S. that does something similar called Your Local that went through an accelerator food X, and super bullish on anything that gets rid of food waste. Typically what happens to those like, buffet platters or whatever is I'm the one being like, can you just like
absolutely. I'm like, can Gooder send it to me? Because like
I'll go hand this out to people. Like I'll take the liability, or I'll just take it home. I hate food waste. I'm aware of Gooder. I didn't know you guys were an investor, so that's awesome. I think on my side, it's really about trying to find the companies that work across corporates. One that immediately comes to mind that's pretty relevant is a company called Leaf Logistics. So these guys, we invested in their Series A out of ZX a year and some change ago, I believe. And what Leaf does is, there's this crazy stat that, I couldn't believe when I heard it, that 40% or upwards of 40% of the trucks on the road, tractor trailers that you see, are empty. And so what Leaf does is basically says, hey, that's because there's a lot of inefficiencies in your trucks. And the fact that, you're taking things from Saskatchewan to Tuscaloosa. I have no idea why those are the first cities that popped into my head. I've never been to either one. But yeah, and then you got to go over to like Fort Pierce or something. And it's you're bouncing around, you're deadheading everywhere. So Leaf comes in and says, hey, let us know where all your trucks are. And hey, AB InBev, Procter & Gamble, Nike, whoever else, we will then say, hey, as opposed to dropping off there and then deadheading for 400 miles, how about you just drive 10 miles, pick up some of their stuff and drive it over here and then pick up some of your stuff. So it's all about making more efficient transportation and logistics systems. Now, the impact that has on in the environment, I think the best thing for the environment, I think, is Zoom. Because it's completely eliminated business travel over the last 3 months. But, next to that, I'm really bullish on what these guys are doing. And, it kind of feeds off of what I'm doing in terms of working with corporates and trying to connect the dots really well, because they're really solving that problem of we're all kind of looking at the same stuff. We all have the same problems. Well, let's like shine a light on that and then be able to collaborate and drive a lot of costs down. So.
Great. So here's a question about getting into corporate venturing. So for this young person, or people just graduated from college, are there any sort of routes that they should sort of look to get into corporate venturing?
I always hate saying it depends, but there are different routes. I think there's two ones that stand out most to me. One is, it's helpful if you're on the venture team and you understand the business, right? The corporate, the umbrella company. So if you have a deep understanding of either that specific company or the industry, then you can be the voice of reason when identifying whether or not this company is relevant to the vision. So that's one way, is if you come from the business, you've done a great job, you understand the strategic vision, and then you apply as an internal employee. And the other is probably more aligned with what overall VCs look for, which is either you're a founder before, or you have some finance experience, or any of those qualifications. I think those two avenues are pretty typical.
Yeah, I think I'll say what I tend to tell friends or people who reach out asking about getting into venture or CVC, because what I do is a little bit probably closer to venture than corporate innovation or corporate on the corporate side. Do the job that you want to do before you do it. So join as a mentor in accelerator programs, just help founders that you're relevant. Go to demo days, and don't really go in with a mindset. Techstars has a motto, which I actually really like, called give first. And it's like, don't go in with a mindset of like, oh, I'm so great and I'm going to be able to help you with everything. Be like, hey, can I maybe add value by connecting these dots? Can I, give you feedback based on my experience, right? For me, given my background in the B2B space, that's a lot of times around like sales and business development and growing your company. But if you're a designer and you're interested in that, help them just like design stuff, right? And that mentorship also kind of gets you start to be able to pattern recognize a bit better. There's some quote there around like the first 10 companies you see, one is the most incredible company you've ever seen in your entire life. And the next 100 companies you see, one is the most incredible company. And then the next 1,000 companies you see, one is the most incredible. And that's so true, because you just like, the more you see, the more you recognize like, actually, this is a standout business. So I think getting involved in the venture space in general really helps if you're involved with kind of the fringes, whether that's mentorship at accelerators, for your expertise is kind of the best I've seen.
Got it. There's a follow-up question. Can you distinguish between corporate venturing and normal investing?
Yeah, I can touch on that a little bit. The line is unquestionably blurry, and it kind of depends on the company. If you look at SAP, for example, sorry, I don't mean to speak for you, but Sapphire came out of there, and they're an incredible venture capital firm in their own right, not necessarily because of or dependent on SAP. Same goes with like Google Ventures or Intel Capital. Then on the other extreme, you have I don't know. There are definitely a lot of VC funds, P&G ventures. They're very brand focused, and they're very. I think a lot of it is internal. I'm not sure if it still is, but it was historically. Like, we want to like create new brands internally. Maybe we'll partner with somebody outside here and there, but it's really about like our core vertical and like launching brands. So I think that it just kind of depends on the corporate and depends on the fund for what they do and how that operates.
Great.
Yeah.
Okay, great. So why don't we do this? We have this tradition here on the show asking for poems, and I want each of you to, share with us something special, whether it's a poem or a proverb or anything similar. Go ahead, Luke.
Okay. I'll go with a quote that I can't remember where I saw it, but I'm a big fan. You can fail at what you don't want, so might as well take a chance on doing what you love. And that is from the great ancient philosopher Jim Carrey. So
wonderful, thank you. Kange?
I love Jim Carrey. That's great. Mine is a quote as well. It says, "The only thing we truly leave behind in life is the love and service we have shown to others." I think it's important to keep that in mind as we kind of get on the grind with work and realize, keeping into perspective what really matters and what our legacies will be.
Great. Thank you, Kange. All right, folks. Thank you, everyone, for joining us today. Thanks for joining us. I hope you enjoyed the show. Please like it, leave a review, and subscribe. See you soon.